Good afternoon. This is Brian Shannon from Alpha Trends Blogspot. It's Friday, September 29th, 2006, and the market has just closed, and we just finished off the worst month of the year historically, but historical tendencies are just that. They're just tendencies. What we get paid on is price action, not on looking at what the market did, the past 20 Septembers in a row, but what's it going to do for us now? That's what we need to look at, and that's how we get paid, but based on trend. And clearly, the trend remains higher in the SPY that I have on the screen right now, the S&P 500. Although today, we've seen a little bit of consolidation the last couple of days, and today we saw more of that. Here, let me just kind of blow this up a little bit. Today we saw what's called an inside day, meaning that today's high was lower than yesterday's high, and today's low was higher than yesterday's low. So all of today's we had no range expansion basically. All of today's range occurred within yesterday's range. A lot of times that comes near turning points, and realistically, we already knew we were at a level of indecision based on the intraday time frame, which we're looking at right here in the 10-minute time frame, where we've seen 2 days ago we saw the moving averages crisscross, and I said that kind of signaled indecision in the market, and most likely was setting up for some boring consolidative trading, which is exactly what we've had the last 2 days. And here we see, the little range that we've been in since then. And excuse me, now that bottom of that range takes on a little bit of added significance near 133 and a quarter, because that's also where we have the rising 5-day moving average as well. So the S&P 500, good day to not be trading today, and that's exactly what I did for most of the day. The NASDAQ 100, same thing here. We've got some consolidation going on. We've definitely got an extended market. Very good to see that this market has closed above that 200-day moving average for the first time on a weekly basis in since basically back here, which was late. I guess it was May of this year. So that's a psychological victory for the bulls. Also in this weekly time frame, we're right near that level. You could maybe say we closed above that level, but we still remain in a very important area where we could get a reversal from. So we're not out of the woods yet, but I definitely think that we ended this week in a much better position than we did last week. In particular, when, if you remember at the beginning of the week, how nervous I was about these mid-cap stocks. And nothing has really changed, though, on the mid-caps. We came to the high end of the range, if we look at the daily time frame, that we bounced off that 50-day moving average. And now that 50-day moving average is nicely heading higher. So I still remain cautious about this area of the market and feel that even though, sure, they led on the way up and people are saying, well, the leadership has changed. Now we're in a big cap rotation, and that may be true. Maybe we're being led higher by 30 stocks of the Dow, but here these mid caps, I still think that if they do break down, it's going to create significant psychological impact to the market and will drag the rest of the market down with it. So I still think there's danger in here realistically until we take out this level near 141, and that was that weekly high back here in, I guess it was July. So they're looking better. I like the way they keep coming up, banging away at this resistance, but they haven't been able to close above there, so I still remain cautious, but clearly I'm not as nervous as I was earlier in the week when it looked like we were in danger of breaking what I thought was the important level, which was right here at about 133.5, and I just tried to draw a dotted line in there, but obviously that didn't come out too good. The semiconductors also I've been a little bit more concerned about. They also did an inside day today. You can see the volume the last 2 days has been really pathetic in there. And the good news is they don't go down, though. On the 10-minute time frame, back below that 134.5, or I'm sorry, just 34.5 level that I've been calling important. So we still have a rising 5-day moving average. Let's see if that holds. Overall, my intermediate term outlook, and that's maybe the next week and a half, is hopefully what I'm hoping for, and what I think is likely to happen is more kind of sideways action. Although we have to keep our eyes open and be alert to any opportunity out there. And if the market starts breaking down, we'll have to take that action. But we've got a nice rising 50-day moving average. And yesterday I stated that perhaps these semiconductors are going to come down towards the 33 level and test that area. Too early to say, so let's not try and predict. Let's just react to what the market's giving us and try and anticipate where the buying and selling might come into the market. And right now it's saying that we're in an overall kind of neutral area on the longer term time frames. On the Nasdaq in particular, obviously the S&P is in much better shape. The Dow, I'm not even going to talk about. Let's take a look at some of these stocks. I'll have more to say about the markets over the weekend. Flextronic, we were in yesterday at 12.95. I had suggested raising your stop in here to 12.82. So that was a small loss, 13 cents in Flextronic. I just also wanted to bring up XM Satellite. Hopefully you got out of this yesterday because I know a lot of people, for some reason, get emotionally attached to this stock. But yesterday's 20-cent loss sucked to take, and I hate taking losses just as much as anyone else. But it's nice to look back a day later and say, you know what, I did the right thing. That was a good loss to take. If I was still in this stock, it would cost me an extra 50, 60 cents here. So that's a good loss to take, and it teaches you that you have to learn to honor those stops. And here now the picture for this stock has dramatically changed. Basically, anyone that's bought it in the last couple of weeks up here is losing money, and it just, it looks like a busted stock now and something I want to stay the heck away from. BLUD, small loss in here today. I've been wanting to buy it above that level. It did it early on and selling it below here. So we lost about 27 cents in BLUD. And again, a good loss so far because it continued lower from that level. KNOT, let's say, we'll do the 2-minute chart up. Let's just keep it on that. KNOT, I said I wanted to see it pull back before buying strength. It never pulled back, so there was no purchase in there. On the short side, we were looking at Boom, BOOM, and on Boom, what I was looking for here was, I suggested that, hey, this is a risky stock, so what you want to do, I typed in BOMM, BOOMM. Hopefully the stock gets bombed because it's starting to do. It did give us an entry here today. I was looking to sell it short below 32.75, and that would be right around this level here. Let's go back to that 2-minute time frame. Below 32.75 occurred right here, and you can see it really never ticked higher from that level, so it's a nice place to sell it short. I think that I'd suggested a dollar stop. I think now you could maybe put your stop up about 33.15, and again, I suggested smaller share size on this one. Hopefully this is something we can hold for a few days, and if we see some market weakness, that it could break this and perhaps really get going to the downside below $30 a share is what I'd hope to see. And these momentum stocks, when they start dropping, they can really implode. So let's hope that something maybe negative comes out on this stock over the weekend. Maybe they're cooking the books or something juicy like that. I'm kidding, of course. It would be nice to see from a short seller standpoint, but enough said. Kamiko, CCJ, what I was looking for here was a little bit of early strength before we sold it short. That strength never materialized, so no reason there to get involved. Last one we were looking at on the short side was Rambus. And Rambus, I wanted to sell short below 55 cents. Here we had that occur. At this point, our stop was then going to go at 17.95. I think you can lower your stop down to about 17.70 in Rambus, and the stock looks like it could drop, I think, down to the 50-day moving average near $15 a share. But I had flagged my official target as this 16.25 low. I'll be back this weekend. Be sure to check back, and I'll have more videos for you. Thanks for your time.